Greetings. Welcome to my weekend market recap, 19th March 2022. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I develop. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of them. And you may contact me using my email ID tradingprofitably@gmail.com. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if options trading is suitable for you. If you have noticed in my latest Q release, I eliminated certain things that were not being used regularly. That is, I am consolidating and I am doing the same thing at the platform level. The more days go by, I am trying to simplify my technique, system, platform, and with the release of MetaStock 18, I am focusing more and more only on Q running on MetaStock. And that you will see is reflected in my weekend webinars also. I am not using any other platforms or systems. These are the different Q systems that are running on MetaStock. I use them. Now one notice, MetaStock has organized for a webinar on Monday at 6 p.m. Eastern Standard Time. I'll join that webinar. I'll conduct that webinar. It's on Monday 6 p.m. and I wanted to share in that webinar that in the month of March, this month, in spite of all the negative news, how I could trade profitably using stocks. And I will demonstrate that using the trade ideas that I had shared earlier before knowing the result. I'll go through a few trades, as many as I can within the time frame that I shared on Twitter or my website, and show how they led my account to a substantial gain trading stocks. That's on March 21, 6 p.m. Eastern Standard Time. Later on, I will tweet the YouTube scheduled link on my Twitter page. Now, before I started with live Q analysis, I wanted to look back at how I analyzed few of the global markets and also some aspects of USA market when everybody was bearish. Nobody was actually talking of buying stocks, at least not the people that I follow. But I did buy stocks, and you know that because I shared them on my forum and Twitter. That was in the USA market, but if you look at the global market analysis, this is what I shared in the previous market recap on the Australian index all ordinaries. And I drew these lines showing that you may look for either a breakout to the upside or downside. It was inside a triangle pattern, and in that case we could look for breakouts in either direction. This is what I shared in the previous market recap 1 week ago. Now let's look at all ordinaries, how it performed since the last analysis. Australian index. This was the trendline resistance. If you notice carefully, it was broken on Monday this week, which also gave a bullish flow. Next day, price tilted down but closed above the trendline support, and very next day again it went up with bullish flow, closed above the trendline resistance again. That means using the Q breakout technique, you could buy on either this day or this day. Because it was going out of a triangle, you could put stop just below the trend line support. That was a low risk breakout entry opportunity. You could do that in all ordinaries, or you could do that even better in the constituent stocks that were outperforming others. That would be perfect timing, and by Friday's close it went up enough to cover the risk distance, and for swing trading we could book profit. Is it possible to buy now not using Q technique? In Q technique we have multiple setups but only one setup for one market condition. The setups have one thing in common, that is they always advise us to enter at a swing low, at a low risk entry point, which came here. Now it is bullish, it has gone up, but we don't have a low risk entry point. So it has gone up, but I will not like to buy now. Let's look at topics. Japan's index. This has also recovered from the swing low significantly above the swing low. So we don't have any low risk buying opportunity now. Overall, it is still in a downtrend. We could have tried to buy at swing low like Australian all ordinaries. However, in this case, we did not have any clear trade setup using Q techniques. In all ordinaries, we had. In topics also, I am not going to buy any stock right now. China CSI 300. Once again, it is also in a downtrend, recovered somewhat from the swing low, less than Japanese market or Australian market, doesn't have any buy or short setup. UK's FTSE index, same picture, recovered from swing low. Now it is already far away from swing low, not giving us any low risk buy setup. Now I see right at the bottom it came to the trendline support that came from far away. If that is the case, did we have a bounce setup here right at the bottom? Let's look at it using weekly daily at a glance template. It indeed had. Not only daily but weekly came also precisely to this very long term trendline support, bounced up from there. Using the exhaustion based bounce long technique, when everybody was bearish, we could take a long position. And you also notice, if I clear the drawings, at the very bottom it displayed bullish indecision again when price closed for 2 successive days on the daily and weekly trendline support. So right on this day, you could take a long trade probably when price was going above previous day's high. And by Friday's close, we have much more profit than the risk taken in the trade. We would book profit in the swing trade. Now we are not going to take a long trade. The stop will be far away. That is the low risk entry technique that we use in every Q trade setup. Now let's look at India market. Before looking at live chart, I want to show what I analyzed in the previous market recap. That time, India's Nifty 50, I showed, this is from previous market recap, came to a swing low and recovered somewhat, came close to the trend line resistance. And I drew the lines at that time showing that if it broke to the upside, we could start taking long positions in India market again. That would be a breakout in the Nifty 50 index. Let's see how Nifty 50 moved this week. This was the trend line resistance that I mentioned, and on Tuesday it broke above the trend line resistance. Wednesday tilted down but closed above the low of Tuesday and then it went up. Using breakout trade setup, once again we could buy on Tuesday, on this day, right when it broke out of trendline resistance, and we could prepare for that possibility beforehand because I had shared that possibility already in the market recap 1 week ago. If we had taken a long trade on this day, put stop just below swing low. In this case, it was a breakout setup, so we could put stop below the yellow direction line and below this candle's low. We have significant profit in the trade. If we traded individual stocks, constituent stocks of Nifty, which were outperforming the index, then I'm quite sure by Friday's close, we covered more than the risk distance and we could book profit once again. Are we going to buy now? No. Now it is already some distance above the recent swing low, the possible stop loss point. We are not going to take any trade in Nifty 50 right now. That may be the same conclusion we arrive at from USA market. If you followed my analysis on Twitter, YouTube, then you would know that in last market recap, I mentioned that I was preferring to take long trades. Let's see how the market moved after that. In the previous market recap, I showed that the sector industry stock advanced decline breadth from 1 month to 1 day was very bearish. Because it was so bearish, I expected a reversal upward and I was ready to buy stocks and I did buy stocks. That was my view in the previous market recap. Preferred direction was bullish and that worked out beautifully because as of this weekend, the sector industry stock advanced decline breadth from 1 month to 1 day, all the periods are now green. Last week, everything was red. So once again, I could start to buy right at the bottom before everybody else. Now people are waking up, starting to buy on Thursday, Friday, and I can see that from the market ETFs. High volume coming up on the last 3 days. This is QQQ. But I started to buy from here. In fact, I bought here also. Throughout the month of March, most of my trades were on the long side. And that is what I will go through in the Metastock webinar on Monday, 6 p.m. That how, in spite of all the people being bearish, I could buy number of stocks and made a significant profit. QQQ has already recovered from the recent swing low. It is near the declining yellow direction line. that is not a place where I will like to buy. Is it looking like it will go up? Yes, because the weekly has displayed a bullish headwind. I will be happy to buy if QQQ comes down little bit and starts to go up again. That will give me a low risk entry point. What about SPY? Once again, it has recovered from the swing low. I'll not like to buy now. Stop will be far away. I was buying here. Notice one thing in the weekly chart, it went up with big move 3 up. That is very bullish momentum. And that very bullish momentum started from Wednesday, from here. But I was buying even from Tuesday itself when the traffic light turned bullish. Now it is too late for Q technique to buy. For SPY also, I'll be happy if price comes down little bit and goes up again. That will give me a low risk entry point. Dia, same picture, recovered from swing low where the bullish headwind had come. I was buying here. I booked profit when others were buying. I will not like to buy now. And small cap IWM also broke out. In fact, all the market ETFs in the previous recap I showed were inside a range created by such trendline resistance and support, and all of them broke to the upside. Once again, IWM displayed bullish headwind at the very bottom that was never breached. Now it is breaking out, but it is some distance away from swing low. I was buying here. I booked profit here. In the weekly chart, all the market ETFs are still in a downtrend, but daily is starting to create a base and go up. But it is a bit too late for me to buy now. During the week, I also tweeted a few other analysis from Q market breadth. Let's first look at the global market as a whole. The global market as a whole also recovered from the swing low. Overall, it is still in a downtrend. I could buy and did buy at the swing low, booked profit here in international markets like India market. I am not going to buy now. If I look at Q global market breadth, let's see what I analyzed in the previous market recap. I pointed to the Phoenix and the bingo, that is baby out of bathwater or sell everything signals. These signals are thanks to Ian Woodward, may him rest in peace. And when I shared these two signals in the previous market recap, I mentioned that as the name signifies, the phoenix may give rise to an up move on the market. And when bingo appears at the low, it's not at the high, near the low. When bingo appears near the low, it may be a sign of exhaustion. Right after that, we had an accumulation count of 2. If you watched my recent masterclass on Q Global Market Breadth, I repeatedly showed that of all the market breadth signals, Q signals alert us first of a possible turnaround. And I mentioned accumulation counts always, for the periods I analyzed, always comes before or coincides with other bullish signals like Eureka. So we had that accumulation count on this day, accumulation count of 2. So we could start to buy individual stocks that were starting to go up. That was Tuesday. On Wednesday, we had an Eureka Day cyan color candle with accumulation count 4. So that was an equivalent of turnaround day in Q systems. We could confidently buy more. And I noticed the media, they were still very bearish. If you notice the next candle, this is not market ETF or future. This is a composite index created from the different indices. But just like it opened below previous day's close, the market ETFs or market futures also opened below previous day's close, and people were bearish. But I already noticed, and I tweeted about it actually on right on this day, that we had an Eureka day with 4 accumulation count. So we had every reason to keep on buying. And I did the same on Thursday also. Some of them I took as day trades. Market recovered, and Friday also it did the same. Once again, analyzing the market breadth signals, I was ready to buy at the bottom, and I booked profit on Thursday and also on Friday. What do we see from the percentage of stocks above 50 MA? The yellow line, that is a leading indicator from market breadth. Earlier I showed that it was moving inside a triangle pattern. Now it has sharply broken above the triangle pattern right at the midpoint, 50% line. Overall, the total view custom index is still in a downtrend. It has already recovered from the swing low for 4 days in a row. I am not going to buy at this point because the stop loss will be far away. The same conclusion that I arrived at from the individual market ETFs. If I look at Nasdaq versus NYSE composites, Nasdaq here, NYSE here, notice once again how the yellow line, percentage of stocks above 50 MA, sharply went up. For NYSE, it is now around 55% level, Nasdaq around 46% level. So Nasdaq is continuing to be weaker than NYSE, but both of them broke out of a range. Both of them moved far above the average line, and for NYSE it went above the midpoint 50%. The yellow line for both Nasdaq and NYSE market breadth are now bullish. Also in the previous market recap, I pointed to the bullish divergence and I tweeted about it also. Subsequently, this bullish divergence in new high, new low percentage, once again a leading indicator, that was there not only in Nasdaq and NYSE, but it was also in the market breadth total view. That also led me to buy right at the swing low, and I booked profit on Thursday, Friday. It is looking much more bullish than 1 week ago, but it is not the point where I will like to buy. I bought at swing lows. What about mega caps? Mega caps also broke out. Earlier, there was a trendline resistance here. I mentioned in the previous recap that we would not be able to trade unless it broke out of the triangle in either direction. It broke to the upside. It is already up for 4 days with very bullish shape candles. So I'm not going to buy now. Stop will be far away. And you see how volume started to pick up last couple of days of the week. So people got notice of the up move only after it went up, but because I have this comprehensive Q analysis in terms of sector, industry, stock, internals, externals, I could buy at the swing low, and that is the secret of my success. Most of my trades in March made a profit because I bought at swing low, not after it went up. In fact, on Friday I was watching the market futures. They kept on going up and up, and several times I was approaching my mouse to buy a stock or future or ETF, and every time I corrected myself saying that, is this the point where Q guideline is to buy? The answer was unambiguous no. That was far away from swing low. So every time I approached for the mouse, every time I pulled back my wrist. I didn't click on any buy position on Friday. I was booking profit in my existing positions. In fact, in the account where I log most of the trades that I share publicly, in that account, I am not holding a single long position. I am not holding any short position also in that account. Next week, I'll see how the market goes. So market is more bullish than previous week, but no low risk entry point. Let's see what we can gather from the bucket analysis. Bucket analysis is clearly bullish. 80% of stocks are above the mid-Bollinger Band. The uppermost bucket has 11% of stocks far below the overbought condition of 30-40%. So it has the potential to go up more. So it is bullish, but it can go up more. However, market ETFs are not giving low risk buy setups. But market ETFs may not give low risk buy setups. Individual stocks could give. Let's see what is the view from technical breadth. Weekly picture. 92% of all signals bullish, strength signals 89%, trend continuation 94, reversal signals 93. It's getting overbought. When all the categories are hitting 90% or more, then it is getting overbought. But do I still expect the market to go up? Let's get some clue from the weekly bullish headwind. 2.9% of stocks are showing weekly bullish headwind. This signal comes at the bottom after a downtrend, and if it is above 1%, around 1% or above 1%, I expect the market to continue to go up. So the bullish headwind is telling, not market actually, this is on stocks technical signals, not market. I expect some stocks to continue to go up. So we may still find buy setups. The question is, are we able to locate a low risk entry point? That's what we have to find out by analyzing the Q charts. If I look at Friday's daily finder technical breadth, that is also bullish. 80% of all signals bullish, 85 of strength signals, 83% of trend continuation, 69% of reversals. Everything is again bullish. So we could look for buy setups on Friday. I did not. And why I did not is that market is already up for several days. I was buying at the swing low. I would not like to buy at swing high, but having said that, we could look for some buy setups in individual industries. After all this analysis, global market analysis, which is looking remarkably similar to USA market now, recovered significantly from swing lows, but weekly is still in a downtrend. USA market looking like the same, market internals telling the same story. QH sector industry stock advanced decline breadth and technical breadth. Everything is telling that it may be a little bit too late. Having said that, let's try to find some buy setups. Let's start with bottom-up analysis. This is the technical breadth of Friday, and I see 8.6% of stocks in my universe, liquid mid-price stocks, had a breakout setup. 8.4% had a gap up setup also. The advantage of having a gap up is that the stop could be placed just below the gap up candle's low. And if that comes with a breakout, that will be even better, because if the breakout fails, that will also take out the low of the gap up candle. So let's try to combine these two signals. Check for any stock that had a gap up with a breakout. That may allow a low risk entry point. It's easy to do such multi-dimensional analysis using Q Finder. Let's flag the breakouts. flag the gap ups. I have 13 gap ups. These are the stocks, and some of them went up by very high percentage. Let's look at their fundamentals first. I don't want to open 13 charts. I could do that, but in any case, I am not going to buy unless fundamentally they are strong in one way or other, meaning either in terms of value or growth. And also I would like to see industry strength. I don't want to be tempted just by looking at the chart to buy. I don't get tempted nowadays like that. But in any case, let's look at the fundamental scorecard of these stocks using QVital, which will calculate the scorecard in real time. Done. Let's look at the stocks. I have several value stocks. Let's check their industry score. All these industries, biotech, data processing, outsourced services, industrial machine, they are not among the top 20%. However, clearly their score is improving. And I have high acceleration in data processing outsourced services. Because the market was very weak for several weeks, this kind of transition in score from weakness to strength shown by transition from magenta color to cyan color is enough for me to buy in those industries. So let's go back to the value stocks. All of those may be a buy candidate. Let's look at these charts now. And you may see how smoothly and easily I am navigating between the different analysis, industry, fundamental, technical. This is the first of the undervalued stocks, PAGS. You may read the ticker symbol from the top. Pegas PagSeguro Digital. In any case, PAGS is the ticker symbol. It broke out of the trendline resistance on Friday after giving a gap up open. That is exactly what I looked for in the finder. And beautifully, I can see it had a bullish headwind earlier. It also gave big move up 3 on this day. I wouldn't buy on that day because it was just below trendline resistance, but I could be ready to buy, and I could buy on Friday at the open. Using intraday pivot chart, Friday also ended up with big move up 3, which came, both of them, both big move up 3 momentum signals came at price extreme low. And I have observed and shared it many times that when big move up 3 comes at price extreme low, almost always it leads to an up move that gives a profitable swing trade, if not more. Using that approach, analysis, concept and technique, you could buy right on Friday near the open, and by Friday's close you could book partial profit. Can you buy now? Yes, you can buy now also. I look at it using weekly, daily. Let's first look at the other stocks. I'll come back to this. MWA. This also broke out of the trendline resistance, opened on Friday with a gap up. However, it has gone up for several days in a row from this watermark support after displaying the bullish indecision from the level where a bullish headwind had come earlier. So we could buy on this day. We could book profit on Friday. On Friday, I will be reluctant to buy this stock because there is no low risk stop loss point for this trade. Close that. EBS. It broke out of one trendline resistance with a gap up open. However, another trendline resistance is nearby. I'm not going to buy a stock in front of a trendline resistance. So let's close this. I am left with PAGS. Let's open this with weekly, daily, even better, isn't it? The weekly came to this very long-term watermark support, created a false downside breakout, displayed a bull release, very bullish shape and bullish backdrop color. In the weekly also it went up with big move up 3 after being oversold for a long time, even in the weekly interval. So weekly is giving even more confidence to buy. You could combine these signals and buy confidently on Friday's open. You can buy even now with stop below the Friday's candle's low, and instead of giving a GTC order in this case, you may decide the stop to be below Friday's low, below this trend line resistance, but see if it is closing below that price on a closing basis, so that you don't get stopped out by a whipsaw. The candle may go down and recover during the day. In such cases, gap up from a trendline resistance breakout, I may not place the GTC stop order, but watch for a close below the low of Friday, below the trendline resistance. So PAGS we could identify as a possible breakout come gap setup, could take it on Friday at the open, could possibly take it Friday at the close also. I saw it was a growth stock, sorry, value stock. Let's look at its complete scorecard, single page scorecard. Now we can see that it's not only a value stock, it's also a growth stock with accelerating earnings growth, which is shown in the year-on-year quarterly earnings growth increase line also. So it's a, well, it has high revenue growth also. So it's a diamond fundamental candidate. Data processing and outsourced services. So we found at least one buy setup, very strong fundamentals. Well, it has a short squeeze potential also. 78% of industry peers went up. And if I am not mistaken, PayPal may be in this group. Is it? Let's check out. Let's check out the peers. Is PayPal here? Yes. Why I remember PayPal as a stock in the same industry is because I suggested a buy setup on PayPal during the week, and I shared that publicly before knowing the result on my website as usual, saganandi.com, under the category 360 Trading Ideas. Let's look at that setup. This is one of the setups I'm going to cover in the MetaStock webinar. This is the PayPal trade I shared. Would you like to buy, if I go to the first post, would you like to buy a high volatility stock at rock bottom price as it finds support and starts to go up? That was shared 3 days ago on March 16th. And if you see the timestamp, not sure if you're able to see the pop-up message, March 16th, 11:42 a.m. So in the morning session. So all this analysis I can do in real time, and just like I did now, align the different dimensions, industry, fundamental, technical. 3 days ago I did the same for PayPal. At that time also the industry score was improving. There was 5-day acceleration. The industry itself was up by 3%, good enough to look for a buy candidate. And I found PayPal at that time. It was up by 4.9% as of that time. 3 quarterly and 3 yearly earnings growth. Not very high, but steady growth. 3 quarterly, 3 yearly revenue growth also. Not very high, but steady. Funds are accumulating short squeeze potential. As of that time, 96% of the industry peers were up. That was strong enough fundamental for me to look for a buy setup. And once again, this M for memory, M for almost magic, weekly trend line support that came from far, far, far away helped me to make the decision. Easy decision. A sharp drop stopped right at the trend line support. If you did not use Q systems, you would probably not be able to know that there was a support. I doubt if any other system would show such a trend line automatically drawn. So you would probably not know and you would not be able to take benefit of this beautiful bounce. In weekly, the backdrop color in weekly turned bullish. In daily, I noticed a bull release that created a watermark support at jump thrust low. When jump thrust both turns magenta, a recovery is likely. Then it tried to go down again below the watermark, displayed a bullish headwind right at the bottom. False downside breakout and it was starting to go up. You could in fact buy on the bullish headwind day itself. I was a bit late. I noticed it and I shared it on this day. And I think I shared another snapshot. Yes, the Q volatility chart. That's why in the post I asked the question, what is your preferred instrument? All the trades that I take can be taken using stocks where we are aligning forces from sector, industry, fundamental, market, bullish view or not, preferred trading direction, bias, fundamental, technical, everything. In case a stock is at a very low price and with very high volatility shown by the cyan color in the volatility chart, plus it was in kind of squeeze, we could short the put if we had confidence to hold the stock in terms of fundamentals. And I noticed the weekly trendline support. So in this case, I traded with naked short put. That is risky unless you are willing to hold the stock in case it came down. But I was willing to hold it long term if need be. What happened after that? Let's look at the live. Actually, in fact, let's see this snapshot. I shared the idea on this day. Next day, I showed that my short put position was already at 35% profit. That was Thursday. And you may notice from the picture what was my strike price and expiry. That was 35% of max profit. I like to book profit in short put trades at 50% of max profit. That was Thursday. If you look at PayPal on Friday, which is in the same industry as this stock we analyzed just now, on Friday it went up further. It hit the 50% of max profit GTC order and I'm already out of my position. This was another long position I could take well ahead of others. Analyzed it on this day, Wednesday, and on Friday I'm out of the trade. There are still buy candidates like we found one. There will be probably other buy candidates. I will not go through them now. You may use the techniques I described here and also on my masterclass videos to find the trades at your end and take them. However, market has gone up for a few days. I would not like to take too many long trades. As I told, I am out of all trades in the account where I take the trades from my forum and Twitter pages. Next week, I'll see if and when to take trades and in which direction. But currently, my preferred trading direction is bullish. Market has broken out of the sideways range that I showed in the previous week. Let's end today's session here. I will have a session again on March 21, Monday 6 p.m. There I look at Monday's market and see if there are new trading opportunities on Monday. Thanks a lot for attending. Other than Monday's webinar, I look forward to seeing you in my next webinar. Next public webinar will be on my channel, this channel, next weekend. Have a great weekend, and as these examples show time and time and time again, there is no reason not to do that. Trade profitably and do that without looking at the news. You may look at the news, but let that not influence your trading decision. Let the complete 360 degrees analysis help you decide whether to trade or not, and if trade in long or short direction. Then there is no reason not to make some profit from the trade. See you again. Thank you. Bye bye.